Update time. How's everybody doing? All right, so we have the Fed meeting coming out a little bit later this afternoon. Decision time. I believe the expectation is here for a 25 basis point hike in the Fed funds rate, bringing it up to 1.25%. If that happens, you should see the typical zombie reaction. They're going to buy the dollar, they're going to sell gold, and you want to go against that. As far as stocks, they've been buying the stock market, regardless of what has been going on. We saw some weak data today. We saw weak CPI data. We saw weak retail sales data, which is definitely going to factor into probably some downward adjustment in second quarter GDP. All right, that's point number one. If they don't raise by 25 basis points, that's quite bearish. That is, but it would not be surprising to me. I have to tell you, the Yellen Fed, as I have said for a long time now, that this is a super cautious Fed. They're afraid to move. They move just incrementally, but even so, they wait. They want market support, but I think they have that. I think the big investment houses are all talking about how they're going to raise, so that gives them comfort to do that. Anyway, that's the Fed report. I did send, by the way, if you saw oil, this was totally as I called it. Those of you who get the MMT Trader subscription, you know that I said, and I have been saying, weak gasoline demand, weak product demand, high production, high inputs, refiner inputs. It all adds up to prices going down. I mean, you have gasoline demand down 3% over last year. You have gasoline inventories up over last year. You have gasoline production up over last year. You have refiner inputs just almost at an all-time record high, which was made all-time record high just a few weeks ago at 17.5 million barrels of crude per day being put into refineries. We're at what, 17,250,000, something like that. So I mean, very, very high level of inputs. Inventories building again now. I mean, if the refiners cut back on inputs, there is nothing to hold this market up. Never mind the fact that the operating rig count, 21 weeks in a row, that is a record string of increases in operating rigs. So, I mean, it does not look good. There is one thing in that report today, which I sent out in an email to subscribers earlier. If you want to find out what that one thing is, then you got to sign up for a 30-day free trial of my report, MMT Trader. Go to pitbulleconomics.com. Right there on the front page, it says, get the 30-day free trial. You could cancel anytime. There is one thing in that report. That report today, that EIA report, was bearish in every category that was on there, with the exception of one thing. One thing. All right? Now, my subscribers know, people on the list, they know. So we have that. And by the way, what happens to oil, that's going to have an impact on Forex. I just sent something out. Again, to subscribers, if you want that one, you sign up for the 30-day free trial. Bank stocks, I talked about that first of all, I sent out an email over the weekend about bank stocks, how the banks, they're loading up on the most conservative assets and low yielding assets. So I said, even though I kind of called the bank stock rally, a week and a half ago, I turned kind of cautious on that over the weekend. I sent out an email saying, you know what? The banks, the only loans they're making are the very short-term, lowest yielding, most conservative loans you could possibly make. And at the same time, they're piling on derivatives. So they better be right. They better be right. So low yielding assets, and they're stocking up on derivatives. I don't know. So I said, it was very suspect, this bank stock rally, and sure enough, you see the banks getting hit today. Dow is up. I mean, this is the thing now. People are just buying. We saw a 0.5% drop in retail sales, as I mentioned earlier. So all that information is out there. We got the Fed. We're going to see what happens on the Fed. We're going to get a zombie reaction, whatever the reaction is. If there's no rate hike, I mean, and if the stock market rallies, I mean, it's actually a little bit bearish. You need to have that. The Fed needs to be pumping in that interest income. We see a slowdown in the fiscal flows. But it is not doing it at a pace that I think is sufficient, notwithstanding the stock market rally, but that is not going to last. That is just not going to last. I mean, there is a fundamental underpinning to stocks and the economy where we started off the second quarter with expectations of what? The GDP now by the Atlanta Fed, they had it at a 4-something growth rate for the second quarter. It's probably going to be down around 1.8 if we're lucky, sub 2%. So that is the update for now. I will definitely get back to you after the whatever the Fed does. We'll see what happens there. You're going to have your typical zombie reaction and volatility all over the place. People jumping in left and right. They don't know what they're doing, buying, selling willy-nilly. That's not what we do. That's not what we do. All right. So that's it for now. See everybody later. Bye-bye.